Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss different volume indicators in this week in the market.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight. The pennies we need are everywhere around us. Pennies.
Going in Raw.
Featuring Dan, Deity of Dips, and Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Sunday, August the 21st, and SPY 422.14. I did make a post about it. I said, whoever is right about it at market close. Let's see, at market close. So do we count that 7 p.m. Central, or are we counting that at 3 p.m.? Because if I didn't take after hours into account, but some dude did say 422. It closed at 422.14. So El Catalan in Sueza. If I mispronounced that, which I probably did, I apologize. If you want to send in a little recording on how you got that, or if it was just a guess, feel free, because I did say you'd have a little part on the pod for being so good at guessing, and I hope you bought puts or calls or whatever it might have been. However, yeah, SPY. We saw it hit 433 this week, closing at 420. Definitely couldn't have convinced me that a month ago. I know we talked about it on Wednesday. What do you think this means for the overall market? I know it's probably good on Friday. We finally had that little pullback of around 1.5%. What do you think about the moves it made?
Yeah, I mean, this is what we talked about for a pretty long time, is that, SPY needs a pullback. So from the bulls, it's really good that SPY, it's really good that SPY, what's what I'm looking for, it's pulled back 1.5% on Friday, especially because it's all above key levels. Like if this was at 409 or 400, I'd be like, meh, you might have wanted it to see to go literally what it did, go to 430 and then pull back a little bit. So that being said, I think it's exciting for bulls where the market is. However, I really do think that we need another test of 400, and we needed to see it hold there and create support, because this is kind of like, now we're kind of inside no man's land. So with that being said, we either need to go for that 450 mark, or we need to pull back, because right here we're too big in no man's land. And I think if we were to rally to 447 or 460, let's call it, without a major, retest of like 407, 408, I don't think that would be good. You know what I mean? So I think bulls will want a pullback to 408 without going higher first.
Yeah, it's always that dip that you want, and then when it comes like, fucking here we go. So kind of moving on from that, we do want to talk mainly about volume indicators today. Obviously, there are a good bit. We mentioned volume a lot the other day on our either stock jargon podcast, I believe it was. But yeah, So we should already have a good base of that. But so obviously there's a lot of different points. What do you want to talk about initially? Do you just want to go into just straight up volume? How many shares are being traded, or how do you want to go about this?
Yeah. So the first thing is that, I want to keep it really simple and just, kind of go through a few different indicators. And the first one being the one that I would say 90% of traders have up on their charts, which is just the regular old volume chart. I mean, the volume bar chart. And, if you use Thinkorswim, it's on the bottom, or most of the time it's on the bottom, or it'll overlap the chart on pretty much any indicator that there is. And so with that being said, I think that it's important that we go through that one first. It's really simple to look at. And that's why I think a lot of retail has it on their charts. All it has is it'll either have a white or a blue or a green or a red little strip. And on the y-axis, it'll have, the number, whether it be in notional or it'll be in shares, like tens of thousands, hundreds of thousands, millions, etc. And then on the bottom will be the date, or if you're on a smaller time frame, the time. And it's really simple to look at. And so I don't really use that for let's call it like the 5 to 30 minute charts. What I really like to use the volume bar chart for is literally for this podcast, when we're talking about daily volume, when I bring up the daily chart and that volume bar is sitting there on the bottom, I mean, I can see the gross difference between the different bars, and then not only that, I can see, okay, the one day, like I'm looking at Coin right now, the one day it traded 8 million. And then the very next day it traded 27. So 3 times that. So that's how I like to use it. Just like a quick glance to see, okay, we might have made a massive move on the chart, but does the volume say the same thing? And that's why I like to use the volume bar chart. Do you use the volume bar chart or no?
I do. I think another good way to explain with the volume and the moves on charts, like it's the same as like credit. Just because you have a 770 credit score, doesn't mean that a car company is going to give you a, Lamborghini with a $5,000 down payment. Because if you only have a $4,000, like a $4,000 credit card in your name, I actually know this as a fact because I couldn't get one without a cosign. Not a Lamborghini, obviously, but I could not get I couldn't get my car without a cosign. I was like, dude, my credit score is fucking dope. They're like, dude, all you have is like a credit card with a max of like $4,500 on it. I was like, okay, so I need like a little bit more than this, huh? It's the same with volume. Like you need the moves. I know we talked about priors. You had 6 you wanted to talk about. I'm looking at a website right now that has 9. So how about I list them off and you can go over and the 3 that you didn't mention, you can say whether or not they're important or whether you just forgot them. Okay.
Okay.
All right. So first one is OBV, on balance volume indicator.
Yeah. So that one I was going to touch on. It is part of the 6, but just a side note with that one, I don't love that one because it feels like it kind of feels like the RSI, but we'll go over it.
Okay. So is the volume indicator that calculates the buying and selling pressure as a cumulative indicator, which sums up volumes on up days and subtracts volumes on down days. When the stock closes higher than the previous close, then all of the day's volume is considered up volume. And then vice versa. So what is that even trying to say?
Yeah, so basically what it's saying is that it's kind of like a trend indicator. So let's just say that like for instance, like I think I just heard you say, sorry, what was the last line that you just said?
When the stock closes higher than the previous close, then all the day's volume is considered up volume. So basically, if it's an up day, all that volume is up volume. So I understand why you wouldn't like that one either if it's all just cumulative up volume. Like, it's, yeah.
And that's where it comes in, where it's kind of like a trend, where it's like kind of like a trend movement. And so as Dan just said, this website that was talking about it, they said that if today's close is higher than the previous close, then it's considered up volume. Well, yeah, but again, this is kind of like the thing with trading and the thing with all these indicators is that it's looking backwards. So yeah, at 4:00 today, it could be all up volume. But what happens if we halt down tomorrow? Like that doesn't do shit for me for looking towards the future. I mean, you could tell me, oh yeah, today had really good strength, like everybody was buying it. And I could look at the chart and say the same thing, or I could look at 20 other indicators and say the same thing. So that's part of my issue with that one. It's just a little generalized, and that's pretty much it.
Yeah, no, I'm with you there. The number 2 they have, though, I think you'll like this one. This one's tossed around a lot, so I know we'll need to dive into it, is volume RSI, relative strength index. Volume indicator, which is similar to, I don't want to do similar to, a volume indicator are used in the, okay, I don't like their definition at all. So why don't you explain to them what volume RSI is, relative strength index?
Yeah, so basically, everybody knows that you have relative strength index, okay? And I love RSI. And so technically there's the RSI and the volume RSI. And so I think that if you actually go onto Thinkorswim or on Webull or any of the others, and you type in RSI, when you type in RSI, there's a few different RSIs that come up, and so the one that we're talking about is the volume RSI. So there's the difference. So the RSI basically calculates, using the chart and using, the prices on the screen, what's the relative strength, where the volume RSI is the same exact thing. However, the only difference is that instead of using the price it uses the volume. So let's just say that, for instance, it takes, the moving averages, and let's say it takes the moving averages, and it takes, 423, 422.8, and you get the average of that, and then you calculate the relative strength, and you get, I don't know, 70. Okay. Well, on the volume RSI, it takes the volume of the averages of whatever time frame you want. So I wouldn't necessarily do it on a per minute basis. I would probably do it more closer towards hourly, or even higher than that. And that's going to give you like a really good sense of where you're at on the larger time frame, so that you can look to short the stock down or to buy it up. Again, it's not going to be one of those things where it's just going to tell you like, oh, it's here, so you can short it, or it's here, so you can buy it. Like, that's not how it's going to be. However, if Tesla, if their RSI is at 70, then you can use that to know that pretty soon you're going to be shorting it down, or there at least will be a pullback. The thing with all of these is that you can use the RSI not just to see where the stock is at, but also you can see this for bullish and bearish divergence. And what I mean by that is that if, let's just say, the price on, and I'm going to use the S&P 500, let's just say, or I'm going to use SPY. Let's just say that SPY is at 423, okay? And then it goes down to 416, all right? Yeah, so then we go up to 424 again, and then we go to 427. Well, if the RSI is lower than that, that is called bearish divergence. And that is signaling that although the price has not changed, the strength has. And so, I know that we're mostly talking about volume here, and you can use it for volume. So obviously what that would mean is that there's less buying pressure and there's actually more selling pressure, even though the stock price is going up. And on the flip side, let's just say that we go from 423 down to 416, back up to 423, and then we go to 414. And let's just, or sorry, I didn't set it up right. Let's say that we're at 420 and the volume RSI and the RSI, we'll say it together, is at 50.
Yeah, because
no,
how about instead of, I don't think going up and down with a bunch of numbers is the best way to explain this. I think
that's what divergence is.
Yeah,
what are you talking about?
Well, I know, but fucking like if you're gonna say 420, 415, you guys got to make sure you're saying like up to 420, down to 415. Because even I'm like, what the fuck's gonna
why would you be going down from 415 to 420?
Well, I'm saying if you're at 420 going, just make sure you're, instead of just saying from 420 to 415 to 430, just if you could add the direction to it.
Sure, if that's what you would like.
I just feel like fucking in The Hangover, when the dude's going down the stairs, seeing all the fucking numbers in front of him.
So bullish divergence is if, let's just say, you're at 416, the S&P goes down to 410, and then we go back up to 416, and the RSI is now I got it fucking wrong.
Why don't we talk about good and like bad, like RSI numbers, like first, like
no, because this is like important.
Okay.
All right, so what did we do? We did bearish divergence.
Mm-hmm. You want to write down the numbers? I mean, I got to fucking paint.
So we did bearish divergence. This is bullish divergence. All right, the price goes from 416, and let's just say the RSI is at 50. Okay, and then we go down from 416 to 412, and the RSI is higher. Or a better example is that we go back up to 416 from that 412 area, and the RSI now is higher
than it was last time we were at 416.
Than it was the last time.
Okay.
Yes, that's bullish divergence. And then obviously, like we just talked about, bearish divergence is the exact opposite. So, the price goes higher, but the RSI goes lower.
So if the price stays the same, it's like it's moved a lot, and the RSI is higher, that means it's bullish. And then if it's okay, because I always thought it'd be if it's because most people explain, if the RSI is below 30, that means it's oversold. So why exactly would it being higher be a bullish sentiment in this scenario?
Well, so this doesn't. So this is actually a great point to bring up, Dan, because let's just say that we did have bullish divergence. Okay. Well, you're not going to want to buy the stock if the RSI is at 70 or anything really above 65, let's call it. Okay. So this is one of those times where let's just say that you have bullish divergence and the RSI is at 30. That's one of those ways where, okay, I have room on the technicals to go higher. Okay. I have room on the technicals to go higher. And the overall, we just saw bullish divergence, which is showing strength inside that stock or inside the volume of that stock.
Gotcha.
You know what I mean?
Yeah.
But on the flip side, if you're looking to short it and you see bearish divergence, you don't want to short it when the RSI is at 17, So even if you see bearish divergence, that can be one of those ways where, maybe market makers are trying to fake people out, bring it down lower, and then whip it back up. That's one of those ways where you can use both. So again, to Dan's point, if you see bearish divergence, you want an RSI above 50, ideally. If you see a bullish divergence, you want an RSI below 50.
Gotcha. Okay, so going more into the RSI for one last little thing about it, could you kind of dive into, or at least get to, when people are talking about swings and all these things, like, oh, dude, the RSI is this low, you gotta buy it. What is that all about? Why is such a low RSI such a good point, and why is like the 30 number or whatever it may be nowadays, why is it so important?
Sorry, so like you're asking for like the parameters?
No, I mean, mainly it's like, you know, how people are like, hey, if the RSI is below 30, they have that number set from, it may be different now, but people always used to be like, yo, the RSI is below 30, you wait till it's below 30, and then you buy. Why is that like the important one? And why do people, wait for this a certain RSI? Like, is that just another buying signal that people have latched onto?
Yeah, definitely. And this is why, I'm not like the biggest fan of indicators, because the issue is that if I look at the RSI on the 15-minute and we're at 80, I'm going to be like, oh shit, I'm not touching this thing. It's super overbought. But then if I'm looking at on the hourly or the 4-hour, it could be at 40, which means that, it has more room to the upside. So this is like one of those instances where, that's why I'm not the biggest fan of indicators, because it can be a little misleading when you think about certain things like that. But typically, when you're looking at it, and this is why it's important to find a time frame that works for you so that you don't get these cross signals. So typically, it's 80 is overbought, okay? 50 is typically your neutral, and then 45 to 50 is typically your neutral, and then 20 and below is oversold. And so typically when it gets to those areas, and so I'm not talking like the 1 minute, I'm mostly talking about like, like the 15, the 30, the 4-hour, like some larger time frames, even the daily. Typically, when it gets to those areas, that means that the technicals are hot one way or the other. And that means that you should be looking for a reversal, at least temporarily, so that the technicals can cool off. Because every time that it typically gets up to 80, 90, let's call it, even above 70, that's when it typically receives the pullback.
Yeah, I feel like a lot of people use RSI just to like skip charting. Like they're like, hey, instead of doing this, I'll just watch this number, as like a little cop out. But obviously, I think one thing that'd be cool is if you guys know anyone that uses these specifically a lot that you'd like to, come on the pod and really dive into more. Obviously, we've been having guests while we do this back to the basics thing. So yeah, just leave a reply and we'd love to have them on. The next one they have is volume price trend indicator. Was that on your list of fun ones, or is this one you don't use? So volume indicator, the strength of a price change. The indicator consists of a cumulative volume line that adds or subtracts a multiple of the percentage change in a share. You want to just go over yours too? A lot of these are fucking just confusing.
Wow.
Yeah.
That one sounds like...
Yeah, no. It's called the volume price trend indicator.
So yes. Okay. So I have heard of it. And that one really reminds me of the very first one that we talked about.
So it says it can be summed up as follows. An increase in price and volume confirms the price trend upward. A decrease in price, and it just seems like fucking common sense here. An increase in price accompanied by a decreasing or flat volume trend is a negative divergence, suggesting that the downward price movement is weak and may reverse. Yeah, I feel like we've talked about this tons and tons.
It's so similar to the first one.
It's essentially just saying, hey, like if you don't have volume and you're moving up, you may fucking go down too. Like, yeah, no, we got that. Thank you, though, elearnmarkets.com. Okay, our next one is money flow index. You like that one?
I do.
Okay.
So here's the thing. All right.
And it's also known as volume weighted RSI. So.
Yeah. So the thing with the money flow index is that it is pretty much like our volume RSI. But the one thing is that, hang on, let me check something real quick because I don't want to misspeak.
No, so yeah, this is just volume weighted RSI.
So it's literally just the one that we just talked about?
It's just RSI, but weighted with volume, yeah.
So that isn't that what we isn't
well,
wasn't
we
that, did we just talk about volume RSI?
We went over RSI. I don't know how much you diverged into volume weighted. But yeah, essentially this is just volume weighted RSI. I know whenever you're going over RSI, you went over volume weighted RSI. And again, elearnmarkets.com. Thank you for this word, Dan. But yeah, money flow index, another term for volume weighted RSI. But yeah. Chaikin money flow indicator. I think they've just are they just tossing this one in? Do you even know what this is?
So I've heard of it, and the thing is that basically,
so it says it's a volume indicator that helps in measuring the amount of money flow volume over a particular period. It adds money flow volume for a particular look back period, typically 20 or 21 days. Fluctuates above / below the zero line, similar like an oscillator. Interesting.
So this is similar to that volume RSI that we talked a lot about. But the thing is that it really deals more with like it deals less with where are you at on this level, like it does have a center line, but it deals more with where do you have bearish diversions, bullish diversions, stuff like that. So this one I honestly feel okay with. I honestly feel okay with grouping into volume RSI.
All right, well, you're going to like the next one. It is accumulation and distribution.
Yeah. So I like this one a lot, and I've tried to use this one for myself because I do feel that it is. I do feel that it is important. That being said, I just found myself like when I'm building a thesis on a stock, I found myself not glancing over at it as much. And building it into the thesis. So I stopped using it. However, I have tried to use it, and I do think that it can be something that is important, similar to support and because a lot of support and resistance comes from, is it a supply zone or a demand zone, stuff like that. And what kind of different, do you have accumulation there or distribution, stuff like that. And that's all important for when the price comes near that. So I do like this indicator a lot. That being said, again, I think it's one of those things where, you can use it, but, it's just going to help you to see really what's going on underneath the candlesticks.
Yeah, I feel like you see the word accumulation used a lot, but you don't see distribution used a lot. Is it just because people are just more people saying to the moon instead of to the ground?
Yeah, we're programmed to want to go long and want to be bullish, like on everything. Like I'm not even talking just the soccer. I mean, like we're programmed to. Okay, think about it this way. People go.
Everyone's a hero till you live long enough to become the villain, or whatever the fuck the saying is.
Yeah. But I was gonna say, like let's think about casinos. Okay, we know that there's a very, 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 very small chance that we will win. However, if we win, the amount of money that we have inside of our hand will multiply many times over again, typically. Of course, like we could take anything. Let's just say we're playing roulette and we're playing the table. Okay. So, and even though we could play this game, again, we'll use roulette 20 times and lose more than what we could potentially win, even if we win once, even if we win at all. However, we still take that chance. And that's what I mean is that when we come down to like stocks, that's why short selling sometimes, that's when we talk about stair step up, elevator down, because nobody's on the elevator down. Like there's a very small amount of short sellers inside the market.
Yeah.
That's all I was trying to say.
Oh, no, for sure. No, yeah. It's just, I think it was a good point just to understand that, you always hear about accumulation, but you never hear about distribution. And, a lot of people may not associate them together just because you only hear about one, just because, we're all so programmed to go long. Next one is ease of movement. I feel like we've kind of gone over that. It says the ease of movement indicator, another important volume indicator, helps in measuring the ease with which a stock price moves between different levels based on volume trends. An easy moving price is one which continues its trend for a particular period.
Yeah, so I've never heard of that one. However, the way that you explain it kind of reminds me of volume profile, which we'll go over later.
Here, I'm gonna send a picture in Discord for you right here.
Okay.
So there it is for you, and the below is the advancing with ease, and below is the declining with ease. I don't know if that'll help you out, but at least, it said this indicator works best in volatile markets where the trends cannot be clearly seen. It It's best to use longer time frames like a daily chart as it identifies trends based on volume averages. The indicator generates buy and sell signals when it crosses the zero center line or makes bearish or bullish divergences as shown on the chart below.
That's really interesting. Yeah, I've never heard of that one. I understand it, but I mean, like this really, I guess this is, the daily chart. Again, just the only thing with this is that it's so backwards looking that, it's kind of an issue for me because like, let's just say, all right, so for you guys that are watching YouTube or even if you're driving inside the car, the picture that Dan sent me, it's of a stock that is priced at $1,700 a share. And so when they're saying that it's advancing with ease on the chart, the line is all the way at the top and the price is almost let's just call it like 1,770. Okay. And then the very next day, the stock drops to 1,630. So almost $1,000, over $1,000. And so then of course, the line, the advance or, the decline with ease goes down. Yeah, so it basically changes. I mean, it basically goes down like isn't that 1,700?
1,800 to 1,700 is like $100, dude.
Oh, but I'm looking at the next day, like when it goes to 1,630.
Okay, so it'd still only be fucking $150. How big of a difference do you think 1,800 and 1,600 is?
Oh, I was looking at it as like 1,000. I was looking at 60. Yeah, isn't it like no, you're right. Sorry, the zeros are messing me up. I thought it was like 16,000.
No, the chart he's looking at, if we do keep this in, it had like decimals and shit, so we'll give him a pass.
Yeah. I'm like squinting to look at it.
No, it's pretty small.
But anyway, my point to this is that, like let's even call $150. I mean, $150 drop in the stock. That's still a pretty significant drop to the point to where it's like, like if I'm looking at this the very next day when it's down $150 and the ease and the declining with ease, like now just went from positive 20 to negative 20, I'm gonna be like, no shit.
Yeah,
like,
no, it just seems like a 2020 hindsight.
Like super,
kind of thing.
Yeah, exactly.
Here, before we go over the next two, is there like one you really want to go over? Because I don't want to have people listening to like stupid ass ones. Like, have we gotten over all the ones that you want to do?
The last one that we can go over is the one that I really like is volume profile.
Volume profile. Okay, well, let's hear it.
Is that on one of your 9?
So the next two on my 9 were negative volume index and volume weighted average price. Obviously, so VWAP. Forgot, very wet ass pussy. And negative volume index. I don't know too many people that uses the negative volume index, but it's a cumulative indicator which uses the change in volume for deciding when the smart money is active. Ooh, the smart money.
Ooh, we're not smart money?
Nah, dude, who knows, dude? Fucking Elon markets. Fucking Elon markets, more like it. Yeah, if you guys do want to look at this article too, literally just Google volume indicators and it is the fucking first thing. So before we go into volume profile, do you want to go into VWAP real quick? Volume weighted average price? Yeah. So we can go into VWAP. So we'll go into VWAP and then we will go into your favorite
volume profile, like we talked about. Yeah. And VWAP is great. I think that everybody should have VWAP on there, just in general. And so the one thing and we'll have to go into this another time, but a strategy that I really like to use is using delta and VWAP. And that's because when the delta reaches a certain number, typically that's like the maximum that it'll hit, and then they'll sell it back down to VWAP. So I really like VWAP a lot in conjunction with delta, but that's for another episode. Strictly just VWAP is basically, and again, this is one of my issues with indicators, is that it's based on the historical value and it doesn't really give us an idea of where it's going to go. Now, that being said, when the VWAP is, and basically, sorry, I guess I didn't explain this well enough, but it's a measurement, of the average price of the security over whatever time frame you're using. And so sometimes you have to change, the different settings. And so what I mean by that is that, typically it will ask for what period you want to look at the VWAP. I think most brokers set it specifically to 14 days, but you can change it to whatever you want. And sometimes brokers, the VWAP will change directly with the time frame that you're using. But the one way that I like VWAP a lot is to tell, especially on the shorter time frames, is to tell, okay, is the stock super far from the VWAP? Is it being, one extreme or the other extreme? Or is it one of those things where, we're at VWAP, and so if we start to break out, we have a lot of room higher. So especially like in 2020 and 2021, I would take a peek at VWAP, see that we were 30% above VWAP, and I'd be like, all right, well, I'm not buying this. And then of course it would go higher. But inside a normal market, you can use VWAP to kind of see, okay, is the price kind of getting a little overextended in the moment? And that doesn't mean that it can't go higher. It's just something that you kind of want to keep up to take a peek at, especially in my opinion, on the shorter time frames. And the last thing is that a lot of different brokerages have things that you can program. Like for instance, you could be a VWAP seller. And that means that anytime that the stock price comes within, let's call it 20 cents of VWAP, then you'll sell 5% of your position or whatever you program it to. Or same thing, if you're really accumulating a stock and let's just say you're a fund manager and you're accumulating a stock on a really large time frame, like you're accumulating it over a certain amount of months and you want to buy, 5% of the company or 4%. What you can do is that every time that it comes near again, same thing. Every time that it comes within 20 cents of VWAP, you mark it by 5,000 shares. So that again, that you're not going to, you can accumulate a large number over time, but you don't have to sit there and press all the buttons, or for institutions, you don't have to, show up inside the dark pool, or file a massive position stake in one day and get retailers spooked or excited. So, or even like I said, is that if you're a larger trader and you got, tons of shares and you're just trying to get out and you're not trying to smoke the stock. I know a lot of guys, especially on the short side, that once the price is, where they want it, they'll use VWAP to sell or cover, a large amount of their shares.
All right. So last thing is you wanted to talk about is volume profile. And that's your favorite, or at least one you really want to talk about the most. What is it about volume profile? Can you kind of dive in? Because eLearn did not even fucking mention it.
Yeah. So volume profile is one of my favorites, mostly because different than VWAP, it is a more commonly used, I'll say, but it's not one of those where the second that little Johnny gets a brokerage account, he is using volume profile. It's not an indicator like that. However, it is commonly used inside the retail space of trading. And the reason that I like it, well, first let me go over it completely. And so I'll take the definition first, which is volume profile is advanced charting study that displays trading activity over a specified time period at specified price levels. The study, as number plots a histogram on the chart meant to reveal dominant and or significant price levels based on volume. So just, let's just take that real quick. Basically, if you're looking at a chart, on the right side of the chart, it'll bring up like columns, but instead of bringing them on what would typically be similar to like the volume bar chart, it's on the y-axis. So it's kind of like pointing towards the different candlesticks, so it's a little weird until you see it. So like if you're listening to this inside the car, you're probably like, it makes no sense. However, you really just have to look at it. You really just have to bring it up. But continuing, essentially, volume profile takes the total volume trade at a specified price level during the specified time period and divides the total volume into either buy volume or sell volume, and then makes that information easily visible to traders. So all is that is saying is that on the y-axis, on the chart, you're going to have the price. So you're going to have, like, let's just say we're looking at SPY, you're going to have 420 to 425 on the y-axis. And then on the actual chart to the left of that, you're going to have these volume bars. And these volume bars, their length is going to be the amount of shares traded, so the regular volume at that specific price, which is really key because a lot of times support will align with those volume bars that are super long. And then on the, we'll take it one step further, which is also, it'll tell you, okay, were these mostly buying pressure here or selling pressure? And now why is that important? Well, if it's a lot of buying pressure and the stock and that area is around the resistance point and the stock price is starting to get back up to that price, okay, somebody's price level is, somebody big was buying at that level. So that means that, okay, are they going to continue to buy there or are they going to stop out for break even? That's the type of things that you need to go into it. And so that's why, again, it's historical, but it gives you really relevant information. Furthermore, let's just say that, you have large volume bars on the profile for let's just say 420 to 424, and the stock and the S&P breaks through that 424, and there's literally there's only 20% of the volume from 420 to 424, from 424 to 430. Now you know that even though there's different support lines in there, there's very little volume out there. So therefore, it should cut through that area much easier. So again, you're still going to use your resistance and your you're still going to use your support and your support and your resistance lines. But this will just give you an idea of the volume that was traded around that and what side it was on. And that's why I think it's super helpful, because it just gives you a really good idea. And if you overlap it, with your support and resistance charts, I'll bet that more times than not on the larger time frames, it has something to do with the volume, with the the volume profile, and that being a larger amount of shares traded.
All right, so that should cover volume indicators. Like we said, follow along on YouTube if you missed any, or just go to elearnmarkets.com. Literally the first thing that comes up on Google if you search volume indicators. Did you want to do a viewer question? Do we have any viewer questions for the folks? Okay, here's a viewer question. So you guys talk about gas pedal and brakes a lot. Can you kind of go into more of that and define what you mean and when we should go harder and when we should kind of pump the brakes? I'm gonna start giving out just full fucking names and emails. Thank you so much, Tommy Garcia 94 at gmail.com. And the social 1922. But no, I think that's a great question. Yeah, I mean, you've seen so many fucking people blow up their account recently, and I think a lot of that has to do with not pumping the brakes. There's certain times where you just have to realize, hey, and it doesn't have to be stopping completely. It can be just slowing down, changing the amount in your account. If you realize, hey, maybe I'm not the best trader and I got lucky in 2020 and 2021, maybe I should take out 3/4 of this. Maybe I should just leave out enough to day trade with. What would your kind of opinion on that be?
Yeah. So this is a really great question. And so there's two instances here. The first one is going to be when you're hot and you want to continue to press on the gas. But one of the things that I find that a lot of people do is that they press on the gas, but when they press on the gas, they go from like 20% pressing on the gas to like full send, like I'm going to go in 80% of my account. And I agree that with your A+ setups, you should press the gas. Okay. So like, for instance, if you have a setup where you have an 85% win rate and you have just been absolutely nailing it. Okay. I agree wholeheartedly that you should be sizing up into that. But what I don't want you to do is that I don't want you to risk a whole month's worth of gains, because that would just be completely demoralizing. When you go from, let's just say, let's just say that you make $5,000 this month, okay, and your average position size is $10,000. I don't want you to move that position size from 10,000 up to 50,000, because guess what? If your stop loss is 5%, well, there goes half of your month. Where before half of your, it would be one trade, and so that's the thing that I don't want to see. So what I want you to do is that if you're going to press on the gas, it's one of those. Think of it literally like you're driving a manual car. All right, you're not going to go from second to sixth. You're going to go from second to third. So you're going to go from a 10,000 position to a 17,000 position. Okay, and then you're going to have some really good trades, and then you're going to go to a 25,000 position. You're going to go into fourth gear, and then that's the way that you're going to work up to it, so that you stop yourself and you don't get into a situation where you absolutely get smoked and lose a month's worth of gains while you were hot, because mentally, emotionally, even monetarily, it's just going to be super draining. And so that's what I don't want to see.
Yeah, I mean, you have those times where you let your guard down and the devil gets inside you, and not only does he put the keys in the ignition, but he goes far above the speed limit. Does that happen to you?
Oh yeah.
Oh yes.
Oh yeah.
The devil
all the time
crawls inside you and goes, just speeding. I mean, like 70 and like a fucking 55, man. Like no care for anyone. But yeah, Go for the flip side now. Sorry.
So that's when you're pressing on the gas. On the flip side, and I feel like this is probably the one that's more relevant to a lot of people, is that when you're cold, making sure that you don't make things worse. And this goes back to kind of what we talked about earlier about how we are humans, like we are humans. Like when we lose money, we hate that, obviously, and we want to make it back as fast as we can. So, and this is where, the first time, let's just say that you lose $1,000 and the next time you double your position size and you go from down $1,000 to up $1,000 because you doubled your position size. It might work the first time. It might work the second time. It might work the third time. But the time that it doesn't work and then you double down again, it's literally like the casino. And that's a slippery slope, my friends. And so when you're cold, what you need to do is that you need to look at your account and you need to say, okay, I might be up 200% this year. I am not going to worry about percentage gains until I get 85% win rate on 20 trades. Okay. Now, if you trade 10 times a day, you need to go for like 100 trades. And that's going to be a way where, you can limit yourself and you prove to yourself. And so when you do that, you're going to cut your position sizing into a 10th of what it is currently. So if your average position size is 10,000, it's now 1,000. Now, again, are you going to make the same money? No, you're going to make a 10th. However, think of it like a video game. After you succeed on those 20, trades, now, and an 85% win rate, now you've proven to yourself that you can make it to the next level and you can get back up to that 10,000. Now, same thing. Think of it like a video game. At 10,000, at that 10,000 level, if you take 20 trades with an 85% win rate, now you can move it up to a 25,000. And this is the way that you're going to be able to control drawdowns. Everybody has drawdowns. I've had massive drawdowns. I have massive drawdowns. I have massive upswings. It's all part of it. And this is
like
the way.
Upping the key in a challenge mode in the World of Warcraft dungeon. If literally anyone got that fucking reference, please comment. Anyone.
I did.
Yeah, you did? What challenge levels do you get up to in your mythic dungeons?
Yeah, 79.
I'm pretty sure they max at 15, but I could be wrong.
No, you don't have the unlocked version.
Oh shit, I forgot. But yeah, no, I'm with you 100%. About going, laying off the brakes and going hard when you need to. Well, I guess we have you about done with that one.
Yeah. And that's just one of the ways where, like, listen, like, if you guys, we definitely get a lot of DMs. However, if you're having issues with, with controlling, like those urges when you're down, like shoot me a DM and just call like super urgent. And like, you want to just talk, like you want me to talk you off the side of, blowing up your account. Like I'd be happy to do that because I'm telling you, you will regret it.
All right, guys, we love you. We hope you have a great week, and we will see you on Wednesday.
Wait. Good episode.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.